with the pioneer of technical analysis in India, only on ET Now.
Let's focus on the F&O show then, and before we start the progress on the show, a quick disclaimer from our end as well. Please be sure to consult with your individual financial advisors before you take any trading positions in futures and options, because while you may make windfall gains, you can also land up in deep losses. We've got Dr. C.K. Narayan who's joining us on the show right now. Dr. Narayan, we are trading closer to that, 50-50 mark right now. Once again, we made that up move, not being able to hold on to those gains. We still succumbing to what's happening globally, as well as our own internal domestic numbers have been discounted. Even while IIP was good, we've not been able to show any kind of an up move or strength for that matter in the markets.
Yes, I think, and that is, that's really what we need to address, because we had this very sharp fall which was followed by about a rally which lasted 2 days. Now, very typically, that's the kind of rally that you actually see when the market is into a strong trend, a 2-day against the trend rally. And the decline resuming today is not really good news. Now, we may try and ascribe it to a long weekend or people trying to take some profits off from whatever they had bottom fished, over the last, let's say, 2 days or so. But the fact remains that a 2-day rally has been succeeded by a decline, and we had this opening gap which has been filled, and the market is really choosing to stay down. So the news is not very good, but at the same time, let's give the market a little of the benefit of the doubt. It has ignored the US markets on the downside. It has now chosen to ignore it on the upside also. Right. So maybe we are, slightly getting delinked a bit. So let's see how it works.
All right, Dr. Narayan, while we've already got 2 strategies, is it time to take a new position? We've got an update on the short triangle. We've got the bull put spread. We probably can look at some other strategy right now.
Yeah, the short triangle is now trading down to somewhere around 65 levels. This was our level of a target. So those who are inclined to take some money off should probably think about that. But then we do have 3 days of holidays coming up, so some amount of theta erosion would certainly be there, and I think one should try and take advantage of that. So you could probably leave it on and reconsider taking your profits on Tuesday. Now, the bull put spread was built with an expectation of an upside bias. It traded into a profit of about 30-35 points, but then the fall of today has actually put it back to somewhere around 92-93. So you're almost about even right now. You should not theoretically let a profitable thing run into a loss. So somebody who's a little more savvy about trading should have excised a stop. In the event that you have not, maybe you can give it another day at best. But if it doesn't work out by Tuesday, I think that should be something which is unmarked. As far as new set of strategies concerned, like I mentioned, somewhat of a disappointment. So I think I'll take a slightly guarded short position in the market. I want to use kind of a synthetic future for this. So I would short the 5200 call and go long the 4900 put. I'm using this mainly because I don't really want to go out on a long or short futures and be exposed to a large, let's say, opening gap, which has now become a kind of a habit with the market. So I don't want to out by creating a synthetic future. And this is something I may look to keep on if it favors, or we may just simply pull it off on Tuesday or Wednesday. So short synthetic future using 5200 call and 4900 put is what I would recommend for the now.
All right, the buyer stays on the negative side, a short synthetic future, selling a 5200 call, as well as buying into a 4900 put. That's a split short synthetic future that Dr. Narayan has recommended.